India is one of the fastest-growing major economies in the world. With strong domestic demand, rising infrastructure spending, digital transformation, and growing global investor interest, the country's economic future appears bright. But every growth story comes with risks. The question is not whether India can grow. The real question is, what could slow down or derail India's economic boom? One of the biggest risks is job creation. India adds millions of people to its workforce every year. While the economy is expanding, many economists believe job creation needs to accelerate significantly to fully benefit from India's demographic advantage. Youth unemployment and skill gaps remain important challenges that policymakers and businesses must address. A second major risk is energy dependence. India imports a large portion of its energy requirements, making the economy vulnerable to global oil and gas price shocks. Rising energy prices can increase inflation, raise business costs, widen trade deficits, and slow economic growth. Recent assessments by the IMF, OECD, and other institutions have highlighted energy prices as a key risk to India's growth outlook. Third is climate and weather risk. India's economy still depends heavily on agriculture and water resources. Weak monsoons, extreme heat, droughts, floods, and water shortages can impact food production, increase inflation, and reduce economic productivity. Climate-related challenges are becoming increasingly important for long-term growth planning. Another concern is infrastructure and productivity bottlenecks. Although India has made significant progress in roads, railways, ports, and digital infrastructure, gaps remain. High logistics costs, regulatory complexity, and infrastructure constraints can reduce competitiveness and discourage investment. A fifth risk comes from the global economy. India is increasingly connected to global trade and investment flows. Trade disputes, geopolitical conflicts, supply chain disruptions, slower growth in major economies, or tighter global financial conditions could affect exports, foreign investment, and business confidence. Finally, there is the challenge of technology disruption. Artificial intelligence and automation could boost productivity, but they may also disrupt certain categories of jobs. Ensuring that workers gain new skills will be critical to maintaining inclusive growth. The good news is that India also has significant strengths: a large domestic market, strong foreign exchange reserves, a growing digital economy, improving infrastructure, and ongoing reforms. India's economic boom is real, but sustaining it will depend on how effectively the country manages these risks over the next decade. The nations that become economic superpowers are not the ones that avoid challenges, they are the ones that adapt to them.